Hey guys, James White here with Bull Market Stock Trades and my third video in my Trade My Trade series. This video I will be talking about the ascending triangle and the upwards pennant. Looking at IRLD here, you can see that we have this massive spike right here and then a short sell-off which brings the price down. At this point, buyers jump back in looking to capitalize on this stock and drive the price back up. Once we get up here, we run out of buyers and we hit a resistance point and another sell-off begins, in which the stock drops back down to here. Buyers jump back in once again, driving the price back up. We run out of buyers, another sell-off begins right around the same area and drops back down. It's at this point that buyers throughout the stock market start to recognize this pattern being formed, whether it's through talking to each other on social media, searching stock charts, whatever it might be, and a lot more buyers start jumping in this thing, and the thing starts hitting. Buyers start jumping in this thing quicker, and what you get is higher lows. So the pullbacks become much shorter because there's more buyers jumping in. Once the higher lows from buyers jumping in reaches that resistance sell-off point we had up here, we get this massive spike that you see here. This spike basically is a feeding frenzy that occurred once these 2 points intersected. Once these 2 points intersected, all kinds of stock traders just jumped in this thing looking to capitalize. Buy, 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 buy. And the thing skyrockets. Now, whether you got in here or here or here, everybody's making money on a spike like this. With this one, the stock went from 36 cents up to 47 cents, roughly a 30% gain, and this one is actually still going right now. Now, tracking these trading patterns and catching these formations sounds like it'd be tricky or hard work, but it's actually pretty easy with a little bit of technical analysis. You can catch these patterns forming, and the reason why is because this thing forms an ascending triangle. Right across the top here you have a resistance line, and across here you have a support line. This thing forms a triangle. Once I put the trend lines in, you'll be able to see it a lot more clearly. So here with the trend lines, the top trend line represents our resistance price, and the bottom trend line represents our uptrend and support. Now, the reason they also call this an upwards pennant is because this first spike would represent the flagpole. This would be the flagpole, and this would be the upwards pennant or the ascending triangle. So what we need to do is train our minds to recognize these ascending triangles. That way we can buy in, hopefully somewhere in this area right here ahead of the spike. That way when the spike occurs, we are already ahead of it and we make as much money as possible. You don't have to get in ahead. You can buy in up here after the spike occurs. It's up to you and your trading style. What I like to do is buy, I'll try to buy down here on a pullback and ride it up to this line. If it doesn't break the line, because these don't always break through, sometimes they fail, so I'll ride it up to this line, and if it doesn't break, I'll go ahead and sell, and I'll take the small amount of profit that I have. But if it does break through, I go ahead and hold and I ride it out. Sometimes I can sell it at the line, it'll bounce back down, and once it comes back up, I can buy back in, and hopefully this time it'll break through and I will get my spike and I'll make my money. So I'm going to go ahead and just cycle through a few more of these just to train your mind to recognize them. RX, this is our resistance point right up here around 56 cents, and this is our higher lows, our rising support line. And once again, I'll go ahead and put the trend lines in. There you go, another ascending triangle formation, which at the point the stock surges. These surges are huge. All of these I'm going to show you most of them are at least 30%. Some of them are up all the way to almost 100%. A lot of times these stocks, this ascending triangle pattern will form over the course of a few weeks, but sometimes they do form longer. This one took about 3 months to form. They can take all the way up to a year to form. Either way, they all pan out the same way. So with this one, here we have our first spike, and then we have our resistance line straight across, and into our rising support line, our higher lows. And I'll go ahead and put the trend lines. Another ascending triangle slash upwards pennant. The pattern forms, we reach a point, and we get a spike. Another massive profit taken out of the stock market. COCP. Now, with many of these trades, you'll get the multiple bottom consolidation that I go over in one of my other videos, and into a spike. And here we have a ascending triangle formation. It's a quick one. It forms very short, over about a week and a half. And then we get another spike, which forms into a second ascending triangle, into a much larger spike, which returns about 50%. So I'll go ahead and put in all the trend lines on this one. Alright, COCP, I've got my trend lines in. Stay tight with me on this one. It's going to get a little confusing, but here you see from my first video the multiple bottom bounce formed, and we got our first spike into an ascending triangle, in which at the end of that triangle we got another spike, which then led into a third formation, another ascending triangle, into another spike. So when we first played this multiple bottom bounce, we would have bought in here and rode this spike, took our profits, and sold out. We would have kept this on our radar, on our watch list, checked it every few days, seen that it started forming an ascending triangle. We would have bought in here, rode this next spike, sold again, and repeated the same thing on this third ascending triangle, riding this massive spike. Now, if we played all this out, riding each one of these spikes, you can see this whole thing started at about 45 cents and went all the way up to $1.50. Obviously, that's a 300% gain. If you do math on that, $500 becomes $1,500, $1,000 becomes $3,000, $10,000 becomes $30,000. Now, if this stock PYDS, we had a nice upwards pennant formation, ascending triangle, into another one which actually failed, because these things do fail sometimes. You're going to need to sell out quick and take a small loss. I'm going to go ahead and put the trend lines in real quick. You can see we have our first upwards pennant here. At the end of formation, we got this spike that went from about 20 cents to 30 cents. Massive gain there into what started forming as a second ascending triangle, which failed. Like I said, these things do fail. So once the stock starts to fall below this trend line, sometimes you will get a little bit coming down through here, but you start getting 2 or 3 bars out of here, it's time to exit this trade, take your loss, and move on to the next trade. ATGN. There we have it, another ascending triangle, upwards pennant, comes to a point and we get a massive spike. This is predicted, it's calculated, it happens over and over again. Patterns aren't always perfect, they're not always pretty, as you can see with EDTXF. It's not as clear as the other formations, but it is there. There's our upwards pennant, and right into a spike, another nearly 100% gain on that one. And last stock, CCCL, there it is. One more time, the upwards pennant. So I hope you like this video. I hope that you're able to take in what I was putting down and can follow this, and we're able to learn something. If you want to get my trade alerts each week, you'll get these trades along with the videos that show exactly how to do them. Just subscribe to my website at www.bullmarketstocktrades.com, or inbox me your email address on Facebook, and I will get you started. I will get you on your way to making money in the stock market. Thank you, and have a good day.